Hi, I'm Paul Carroll. I'm the editor-in-chief at Insurance Thought Leadership. I'm delighted to be joined here today by Mick Moloney, who is the global head of insurance and asset management at Oliver Wyman. Mick led the panel at the recent International Insurance Society Global Insurance Forum. That was the kickoff, the lead panel at a forum that was focused on powering the recovery. And I'm delighted Mick joined us today to go back over some of the things that they covered there and to add a number of his thoughts as well on where we go from here and what I think of as a really pivotal moment in the recent history of the economy and potentially a pivotal moment for insurance. So Mick, thanks for joining us. Thanks for taking the time.
Pleasure. Delighted to be here, Paul. Thanks for having me.
So, given where we stand, how do you think about the role of insurance in powering a sustainable recovery for the economy, for the climate, and for the host of other things that are out there as big issue these days?
Yeah, I think it has a central role to play. I think as you know, the insurance industry itself is pretty vast, and I think I always try and break it down into the kind of subsectors of the industry, which I think have distinct roles to play in terms of kind of helping with resiliency going forward. Some have a role to play in terms of helping with resiliency at the consumer level and the individual level. Some have a bigger role to play, I think, at the kind of corporate and kind of institutional side. And certainly, I think for the kind of life and retirement subsector within insurance, I think the biggest role I think kind of our clients there are focused on is how to help with this question of kind of financial wellness and financial resiliency for individuals. So obviously, the pandemic in lots of respects was kind of a shock. The government made it less of a financial shock than it might have been for certain kind of parts of the consumer landscape. But I think what it brought home to everybody was, do I have enough financial protection? Do I have enough by way of a safety net in place for me and my family and others that I care about? Now, the life and retirement sector, I think, as you know, has had a struggle over the course of the last decade, certainly with generating growth. So it looks out on the landscape and has had a certain set of products and approaches that were successful in the past, but kind of have petered out somewhat in terms of their kind of runway. And I think the life and retirement sector looks at this question of financial wellness and says, look, people are sensitized to it now. It's something that we should be able to serve, and it should be a win-win in terms of serving consumers, in terms of improving their financial wellness, and also then economically kind of powering growth for us in a way that hasn't been there. The obviously then the kind of subsector kind of most acutely impacted by the kind of environmental and geopolitical uncertainty, I think, is the property and casualty sector. And I'd include in the property and casualty sector the kind of reinsurance sector as it kind of stands behind them. And I think there, the question in a way is, everybody is focused on climate and climate resiliency. Everybody is also focused on this question of cyber and cyber resiliency. And in particular, the fact that so much of the world switched to digital means and digital interaction kind of during the crisis meant that the volume of digital risk increased, and therefore the volume of kind of cyber risk increased. And that's certainly kind of a very hot space in terms of what we're seeing occur. So I think the property and casualty sector in particular, I think, has a lot to do in terms of the climate in particular has kind of two sides, as you know, for a property and casualty company. One is for my balance sheet, what do I need to think of and be aware of in terms of the climate risk embedded in the liabilities and the assets that I'm holding. And secondly is as I'm looking at underwriting and kind of offering products into the space going forward, what risks should I be comfortable taking? Where should I be looking to governments to kind of support me in risk taking? And I think the sector overall, I think, is looking to insurers also to be part of the kind of climate change journey in terms of, obviously they're deploying capital into risks. If those risks become more apparent and priced, then it causes change in terms of the corporates kind of ceding those risks to the property and casualty sector. So I think in terms of highlighting where those risks are and kind of supporting a transition to something that looks like a lower emission future, I think the sector has a role to play there too. And then the final one I'll mention is, I think sitting over the shoulder of a lot of the industry, and I think we'll come to a question later on about incumbents versus challengers, but I think the other part that's obviously been super active is there is just a massive volume of capital in the landscape generally. That capital in some cases is being deployed by private equity players, and those players have become kind of more significant in terms of their role in the industry. And I know we'll kind of come back to that, so I might kind of park that until we get there. But I would say, look, the industry in general is focused both on the consumer and the corporate and society at large in, across those financial wellness and kind of individual security and particular themes then that have come out in terms of, cyber, pandemic and climate, I would say.
So that makes a lot of sense. I found it interesting that the Nobel Prize winners in economics this year were basically folks who figured out ways to extract information from natural experiments. And in my estimation, in a lot of ways, the pandemic has been just a great, awful, wildly disruptive natural experiment. And people have had to go digital, and there are a lot of other things. And I think that if we take advantage of this, as you say, a lot of people are focused on life insurance and health because an awful lot of people have gotten sick and an awful lot of people have died. So there are ways to, sort of rethink this and reposition things more dramatically now, I would say, than has been the case certainly since I've been following in insurance, which leads naturally or fairly easily, I think, to the next question, which is where do you see the greatest opportunities for the industry to directly or indirectly support improved resiliency in this new environment?
Yeah, I not surprisingly, I think they build on some of the things that we've kind of covered there. I do, my hope certainly for the life and retirement sector is that it can really grasp the nettle and find ways of reaching particularly middle income kind of households and the kind of middle market, as it's often called, in ways that are both cost efficient and also deliver products that consumers can understand and engage with in a way that the industry has often kind of struggled with it, in terms of making sure that there's a safety net there on the financial side. I think kind of more broadly on the corporate side, I kind of have a view that for the kind of mega risks that we've seen in the pandemic, there's a marriage that's required between property and casualty carriers, reinsurers, and very often governments in terms of there's only a certain volume of capital there that's capable of supporting systemic risks, and the pandemic has a lot of systemic risk embedded in it. So I'd hope in a way that we don't lose sight of the opportunity to say, look, we need to learn the lessons of what we've gone through and build more efficient systems between government and the insurance sector and the corporate sector in terms of delivering on systemic risk kind of when it happens. And I thought, for example, remember that this kind of small business loan facility that came through in the US and was largely, I think, intermediated by banks at the time. My view was always that you had this unusual circumstance where a lot of some businesses didn't have any cover in place, some businesses had cover in place, but it didn't cover a pandemic event when they needed it. But the conduit for actually indemnifying a business for the loss that they incurred through the pandemic, I think a very natural conduit for that is obviously the kind of insurance cover they have in place. I think the issue with it through the pandemic was the industry, A, in lots of cases hadn't signed up for that, and B, just the, it is an event that is too catastrophic for a set of capital backing an industry to cover even where it is. So it needs the government to kind of step in, but feed the pipes that are flowing through to kind of small businesses in particular. And I think as you look at that, you think, look, gosh, wouldn't it have been terrific if we'd plugged the kind of government capital into a kind of comprehensive insurance system in a way that would have been much more efficient, I think, than simply the kind of small business loan program, because as you know, that was a very blunt instrument, I think, in terms of delivering some of that, some of the relief that was needed. So anyway, look, as you said, this thing has been a massive global experiment or behavioral science kind of thing playing out at once. I hope we don't go back too quickly to kind of business as usual and do spend the time kind of thinking about it, because I think the industry can come out of this much stronger and serve some needs that became very apparent.
That makes sense. I would like to explore just a little bit more of this sort of relationship between government and the insurance industry, because I'm struck at how the layman thinks, oh, these insurance companies have hundreds of billions of dollars, trillions of dollars of assets, they can handle anything. But in fact, a pandemic is not an insurable event. There are people who think that cyber at the highest level is not an insurable event. So there has to be some sort of back and forth. I actually did an interview with NPR yesterday related to a book that I did that came out about a month ago. And we were talking about sort of the role of government. And it's always struck me that if you take the Gates Foundation, which is the most heavily capitalized foundation in the history of the world, it would cover 6 months of the education budget in California. So, one state, so the scale at which businesses, foundations operate is just different. So do you see other ways, potentially I guess it's the Insurance Development Fund Forum, I forget, it's called IDF, the UN is involved in this. Are there ways for the insurance industry to sort of help quantify risk, signal the cost of risk and so forth, and work more with government, in particular on climate change, but also on some of these other things as well than the industry has in the past?
Yeah, I think look, it's always possible to improve. I think kind of links between industry and government. But as you know, the tricky thing, where insurance comes in is if there's a risk that is diversifiable, kind of across a kind of an industry sector or across that's where insurance thrives. It's look, we'll pool the risks, and together we know that we've got a great degree of certainty over what that distribution looks like, and therefore we can put capital behind it. We know how to charge for cost of capital, and the volume of capital there is going to be sufficient to cover anything that occurs in all but extremely kind of exceptional circumstances. I think where it fails, as you just said, is where there's a systemic event that hits everybody at once, or a very large number of people at once, you can look at funding for kind of catastrophes and the way kind of capital arrives at that in one sense, but the pandemic is 2 orders or 3 orders of magnitude kind of bigger, obviously, and the question then is really, is there enough energy there to enable collaboration between kind of government and the private sector to enable a system? And I think the issue in a sense with pandemic risk is that anytime there is a risk that's viewed as a kind of deep tail event, it's very hard to get people's attention to do the heavy lifting to enable the system for that in advance. So you kind of just you run into an issue of prioritization, that it's just, look, this thing might be a 1 in 100-year event, and therefore the idea that we're going to spend a lot of calories and so forth on coming up with the system in advance is hard. There have been, as kind of moves afoot to do that through the pandemic. But I'm not aware, and you may know more than I do on this front. I'm not aware as yet that of the 3 or 4 initiatives that we're running, that anything kind of concrete has come out of them in terms of how this will behave in future. And then it's made more difficult, of course, by the fact that it crosses, it's a global event. So you look and you go, not only am I trying to negotiate something with, or figure something out with one government, but I'm trying to do it in multiple places at once. So look, all that to say, I think there is a role, and look, you can, you got a lot of stuff going on in climate. You obviously, as big infrastructure investments kind of roll out, assuming that they do, I think, even ensuring those things itself becomes, is a very big thing for a single carrier to do, and ultimately there may be some kind of public-private kind of element to how that works. But so yeah, look, I think the need is there. I think the question is, will it get enough focus to come to some kind of resolution?
Yeah, no, it just kills me that we're so great at spotting problems after they happen, which is, not overly useful. I'd been worried about a pandemic for a while because I've known Bill Gates for 35 years, back to my days at the Wall Street Journal covering technology, and was aware of the sorts of things he was saying in 2015, warning about what could happen with a pandemic. And then, this comes along. So I've covered technology for a long time and have been interested to see what has been happening and not happening in insurance. The tech guys are great at promising all kinds of stuff, but last I checked, we're not working for our robot overlords just yet. So from where you sit, where is digital technology having the biggest impact? And maybe I won't even ask the downside. We'll leave that for another day. But where you're seeing the biggest impact at this point?
Yeah, it's a question we discuss a lot, and I'll be interested in your perspective, Paul. I mean, there is no question, I think, that digital and technology has caused a lot of value to be created and move around over the course of the last decade, let's say. A conversation we often have with our clients is, am I moving fast enough and investing enough in digital and technology, and where is that change likely to impact me? And am I moving fast enough in terms of either going after new value or protecting the value that I have against somebody who might kind of disrupt it? Our perspective, and look, it's not a definitive thing, but I would say most companies in the insurance sector have done a good job of investing in kind of digital and technology around what they are doing today. Now, they could always move faster, and there's always a paranoia and a concern about it. Where I see the question, though, is you look at it and you think, look, particularly if I look out across financial services, what you can observe is that traditional players in financial services have had a solid run of it over the last 5 or 10 years. But you can compare players that have kind of a data or analytics driven business. So some of the exchanges, for example, and you can say, look, the volume of growth I can observe in digitally native businesses, or businesses that are, very heavily focused on data and analytics, is significantly beyond the growth I can observe, even though it's been pretty solid in financial services and in insurers. So I think the question for the insurance industry is, look, investments are being made in data and technology. I think a lot of people have a degree of, I won't call it cynicism, but, kind of healthy doubt around insurtech and fintech and just how big an impact that's going to have on the industry. Some of those businesses are kind of beginning to mature. But equally, you look at it and you can easily say, look, guys, for all the fact that data and analytics should be a massive area of opportunity for insurers, it's hard as yet to point to any insurer that can demonstrate outsized growth and a really different story now than 5 or 10 years ago because of data and analytics. So I think the question we're asking ourselves for the industry going forward is just, is that how imminent an issue is it? Can you continue on the way you are, or is there something more fundamental that's going to happen by way of change? Now, as you know, look, you can pick lots of themes and think about them. So you can say, look, if the part of the industry that I didn't mention in my initial comments was brokers, right? So you can look at brokers and say, look, they are probably the shining stars of the sector in terms of the price earnings multiples and the returns that they've had over the last 5 years. One way you could look at that is to say, look, if the incumbent carriers, I think, are perennially saying, how do I take some of that value back into manufacturing from distribution, right? And in a way, that's a question about, proximity to a consumer and the role of an advisor to the consumer relative to the manufacturer. And certainly you can construct scenarios where the incumbents find ways of getting closer through data and analytics and digital to the end consumer and capture more of that value back into themselves. And that's value in the system today, not only value that kind of might be created. But I think, and I know we're going to talk about it later, I think it has never felt like an imminent threat. I think over the last kind of 5-10 years, everybody has said, look, is Amazon going to enter? What's Google going to do? Is there, but that as yet hasn't come to a point where somebody goes, oh gosh, look, I need to kind of move very quickly. And equally, I think for various different reasons, the incumbents have, either through lack of appetite or attention on various other things, not really gone very heavily into a bet on data and analytics as a core part of what they're doing, rather than as kind of something more foundational and incremental.
Yeah, no, I'd love to have a long conversation with you about this at some point. You sort of take me back to my days in Silicon Valley, where one of my favorite lines was, never confuse a clear view with a short distance.
Right.
And I think a lot of that is going on, because we can all see what it looks like, but it's not clear how far off in the distance it is.
Yeah.
But for me, one of the things I was struck by listening to the sessions at the Global Insurance Forum was how many people talked about how they still needed a wet signature. I thought, you need a what?
Right.
In this day and age, and I still hear stories about fax machines. One of my mantras for a while has been, let's burn all the fax machines. So it'll take a while, and I think if we can even make progress on that front, then that would be a good thing. So I know I'm taking up a lot of your time. Maybe just one final question, as long as you touched on it, and that's the relationship between incumbents and insurtechs. Some of that came up recently when Evan Greenberg made his comments about how insurtech is all hype and so forth. From your standpoint, from my standpoint, there's not a clear winner, but from your standpoint, how would you balance the two, and how would you talk about what the relationship maybe could be or should be between the two going forward?
Yeah, I certainly, I think the view amongst a lot of the kind of incumbent industry execs, I think, is kind of consistent with Evan's view that these things, there's a lot of activity, but that it's mainly been on the periphery, if I can put it that way, rather than anything that's really caused significant change in the core. And now you can see, as some of the insurtechs, like the Roots and the Lemonades and so forth, kind of coming of age, and obviously they have, you can argue or not over whether you like the business model, but they have significant valuations and are beginning to be kind of a feature. So it's not like it's not moving in a certain direction. But I sometimes think it's the wrong question to ask, in a way, right? Because I think, look, nobody sitting in the industry believes that the industry is perfect today. And I think most execs that you would talk to would say, I'd like to increase the speed at which I'm innovating and the speed at which I'm moving. And I have a set of areas, and the areas are often, I need to be better on distribution. I need to be better able to serve small businesses. I need to be faster at innovating. I need to be much better at using data and analytics kind of in my enterprise. And that's ingestion, and also the analytics that sit on top of it and so forth. So there's a set of problems, I think, that incumbents are focused on that, not surprisingly, the insurtechs are also focused on, because they view that as a way of creating value. And the issue is that the insurtechs are capable of moving fast, and a lot obviously try and fail, and that's a fine motion there. And the incumbents struggle with that. And I think the question we're beginning to see people ask a little bit more, and I think people are trying things and haven't quite got it yet, is how do I actually try and marry together the two motions in a way that means that I'm not just looking over the fence and going, you guys aren't really making much difference yet, but I'm taking the best of what's there in terms of the ideas and the ability to kind of move fast, and trying to graft them into, you know, my much larger enterprise in a way that's increasing my speed and improving my kind of customer value. It's much easier said than done, but I have to say I'm seeing a lot more attention on that, and I think that then will actually, you know, solve two problems at once. So it'll say, look, guys, like, you don't just need to observe and say, hey, come to me when you're kind of at scale and can do something meaningful, because it's hugely expensive to buy somebody then, and it's actually very hard to put two things together, rather than saying, look, I'm going to find a good way of collaborating with, you know, 10, 12, 20 of these things that are actually important to me, and we'll craft a win-win.
No, it makes sense. I've believed in sort of a hybrid model for a while. I've seen some big companies going back to IBM and Intel try to really manage the process, and they wound up smothering the startups. Whereas I hope people can learn from those lessons and do a better job. So this has been great. Would have been great if we had about 4 hours instead of 20, 25 minutes or whatever, but we'll maybe do that some other time. So for now, I'll just thank Mick. I will encourage people to follow up with a final slide we'll show and take a look at more of the sessions, including Mick's keynote panel at the Global Insurance Forum. Check out the International Insurance Society, follow up with the folks at Oliver Wyman, who, in my experience, produce an awful lot of smart thinking on a whole variety of insurance-related topics. And of course, as the editor-in-chief at Insurance Thought Leadership, come visit us. In particular, sign up for the 6 Things newsletter that I send out every week on topics like this. So Mick, delighted to be able to do it. Thanks again for taking the time.
Thanks for having me, Paul. Enjoyed it.